Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Monday morning, or at least a very good cup of coffee. I hope everyone's doing well, and we're going to kick off a look at this Tuesday session with where we sit in relation to, what was a pretty good rally off support on Monday. So if you checked out the Friday video that we did here at the Simpler Trading YouTube channel. And stay tuned for content that's going to be coming up on my YouTube channel at Ragheehorner. I've got some cool things planned. But if you checked out the Friday video, and we talked about last week, is the struggle over? We talked about different levels to keep an eye on. This is simply an oversold S&P. You can say the same thing for the NAS. So this is simply an oversold S&P. I'll show you how we recognize that. So first of all, you'll notice this little signal down here. This is simply that this indicator has gone down into the oversold zone, or the low zone, right, of this indicator. And that's not the first thing, though. That's actually the last thing. The first thing is, what's the structure? This is still a neutral environment. And if it's moving sideways, then I'm going to be looking for overbought, oversold indication. You might say, okay, Rog, how do we know it's moving sideways? Why, after a sell-off since April 12, is this not a downtrend? Well, if we think about the way that we define trends, for most traders, it's defined pretty arbitrarily. Things go up or down fast enough for long enough. If it's accompanied by bad enough news, we sort of arbitrarily assign, oh, this is a downtrend. Now, not everybody does that. Some folks will look at longer term moving averages, 20 periods, 50 periods, 100 periods, 200 periods. But think about how many periods even 20 or 50 SMA or EMA needs, a simple moving average or an exponential moving average needs. It needs 20 candles, right, to start averaging out whether something's weak. And then if for those traders who like to use crosses, if a 20 candle average has to cross with a 50 candle average, and this weakness has really only been happening since the 12th, how late to the party is that calculation? So again, those are really classic ways of looking at structure, but they're dated. We have better ways to do it. One better way to do it would use an exponential moving average over a simple moving average. That's a really easy tweak that anyone could do on their charts. And when you make that tweak, what you're doing is you're weighting more recent data heavier. That's an easy thing anyone can do. What I like to do is add in a bunch of other factors, and the kind of sum total of the approach is the two P's: price and participation. That's always what I'm looking at. At what price am I seeing participation? What's participation? It's buying, it's selling, right? And so if I can do that, I should have a quicker way to A, notice the trend is no longer in play, April 5, and B, notice when the momentum kicks in, April 16. But the entire time, I know that this is still bearish Momo, neutral trend. And in a neutral trend, even though I may disagree with it, even though I might succumb to whatever's happening and being talked about on television, I have to remember, trust my gauges. I like to tell the story. I don't like to tell the story, but it is a good story of the first time I did a wall dive in Bimini. So through college, I was basically flunking out because I was busy trading in my dorm. And then I ran a business where I was a dive master because I love to dive. And I figured, what's the best way for me to do this? I'll become a dive master. So we went over to Bimini and we dove the shelf. I don't know how many of you have done the continental shelf. Really cool dive. And so we're diving the continental shelf. It's my very first time. And I've dove deep before, but I'd never dove the shelf. And they said, hey, because the reef is vertical, not a horizontal reef, you'll just sort of start to lose your place. And I remember at some point I got what they called narked, nitrogen narcosis. I think that's what it was. But I just got turned upside down because it's the first time I dove a vertical wall. And at some point, when you're down deep enough, you start to compress. You don't know which way is up or down. How many feel that way in the market right now? I don't know which way is up or down. Yes, Rog, we have nitrogen narcosis in the market right now. And I had to look at my gauges. I had to look at my depth gauge because I really didn't trust which way I was going. I couldn't tell. It's easy when the reef's flat, when it's horizontal, But yeah, it definitely was a moment where I just remember, trust your gauges, Rog. If this is saying you're going deeper, you're going deeper. And you get kind of turned around. I kind of feel sometimes traders get turned around and they're not quite sure which way is up and which way is down. And that's why I say, trust your gauges, right? Trust your gauges to tell you, yeah, this looks really bearish, but it's just a lot of bearish momentum within the context of a neutral environment. Let's go do the same thing on the S&P. That's the NAS. So S&P, again, really bearish volatility kicks in by April 12, April 15, down, down, down. But is this enough weakness to actually turn into a downtrend? And it was not. So if someone's treating this as a downtrend on the daily time frame, mind you, the problem with that is once you start treating something as a downtrend and it's not, you might start to take really bearish, aggressive shorts, right? You might start to short into lower lows because, oh, well, this is going to keep going lower until Monday happens, right? So if you take a look at Friday's video, again, I'm not saying I'm predicting anything. I'm just looking at my gauges and saying, this is up and this is down, and this is where I am in relation to that vertical wall. So that's why we've been focusing on the long side. What's another reason we've been focusing on the long side? And this was particularly interesting in the Dow yesterday. So the Dow early in the morning had a few sentiment cues. All right, what does that mean, sentiment? So there's three things I'm always measuring: sentiment, momentum, and trend. Sentiment, momentum, and trend. What is it? Sentiment is what we're all thinking. And it's as simple as saying, am I bullish or bearish? For this moment, am I bullish or bearish? So imagine sentiment is something we're always asking, right? Like getting on a long car trip. Are we there yet? Are we there yet? Are we there yet? That's sentiment. Is it bullish? Is it bearish? Is it bullish? So sentiment is what we're thinking. Well, if we're thinking something for long enough and enough of us are thinking the same way, it turns into momentum. Oh, I'm going to act. I'm going to buy, or I'm going to short, whatever it is. So sentiment leads to momentum. Now, momentum is the least important of this trio. The way people are thinking, and ultimately the trend is the most important. So to me, the most important facets of the market are market trend, market sentiment, and the least bit is market momentum. Momentum, it can be very fleeting. Momentum can actually be really deceptive. So that's the least important for me. So sentiment and trend. How do we measure sentiment? The easiest ways to measure sentiment is with price and time. Now, could this lead to longer term follow through for the day? Is this just a day trading measurement? It is very effective as a day trading measurement. But the first thing I'm going to ask myself is simply, are we above or below the previous session close? Because this is the most blatantly obvious level to think about. If you look at a position you bought yesterday, if you bought, I don't know, Nvidia yesterday, and you ask yourself, am I making money or am I losing money? Where are you going to make that assessment from? Where you bought it, right? And then if you ask the other question of, is Nvidia up or down today? Right? You're not going to ask if it's up or down necessarily from where you bought it. That's where you're making money from. But your sentiment, your opinion of Nvidia, even if you own some of it, is going to be, are we above or below, in this case, 795.16, right? That was the close for the 22nd. So on the bell, I do have a little label here that will remind me, hey, by the way, we were up 4.35% on Nvidia yesterday. From where? The previous session close. So that's how all these things are measured. So if Nvidia can trade above the close, there will be bullish sentiment. Where there's bullish sentiment, there could ultimately be a little bullish momentum, and sentiment plus momentum equals trend. Now, if the first sentiment read on the morning, it's the very first one we can take, is the previous session close, there's really three lines in the sand, as I've been teaching for a lot of years. There's three of them. The other one will be clearing range. So as you're looking at the morning thinking, Rag, are we going to follow through? And the Dow was a really good example of this yesterday. Are we going to follow through? Look at a couple other levels. The next level you'll look at. So on the open, previous session close, right? So think of this as your price and time-based list for those lines in the sand to understand sentiment. So are we above or below the previous session close? Then at 10 a.m., you have your clearing range high and low. Are we above or below that? And then at 10:30, you're going to have the initial balance high and low. Are we above or below that? And as you incrementally see those three things, either above or below, you'll find that's where the follow through will be. So you can almost check it along the way, like mile markers on your journey to wherever you're going. Oh, we're getting closer. So each one of those three things, you'll have three of them you can check by 10:30 in the morning. So 1 hour after the bell rings, there's three things you can ask. Oh, is sentiment continuing to be bullish? Or did I just get above the previous session close? Or is sentiment bearish? Or am I just below the previous session close? So those things are really, really, really easy. And that's a great place to start. Now, are there more advanced ways where you need indicators? Yes. But, to me, start with the free stuff, right? Start with the really basic free stuff that, you can do, everyone can do. And then if you find that process really adds something to your setups, it's really giving you better follow through, it's giving you better trades, then you can start to add, more advanced things. You can start to ask about anchored VWAPs and points of control, and ask about, what's happening on something like a V-score indicator, things like that. All right, so that's where we sit right now. And those are the first three things that I'm going to do this morning, as well as look at where we are in relation to the hourly price movement ranges. So where are we in terms of trend this morning? All sideways trends. All sideways trends, the 5-minute charts of the indices. And then it's bullish candles, that's for sure. So when we take a look at the indices, again, are we above the previous session close? That one's covered. All right, so we know at least we're above that sentiment line, that line in the sand. All right, Uber. Is Uber weak enough to short? It just got it. Yeah, it just got it. Ben? So this is what I mean about real-time, trust your gauges analysis. Great question. So I'm looking at my top tier pro system, and what is it going to tell me? Right here, this is structure. This is our multi-structure. The top row is momentum. The bottom row is trend. And you'll see the momentum's been bearish for quite some time. Bearish momentum does not guarantee a trend. It is often a precursor to one, but it doesn't guarantee one. I mean, there's no guarantees in the market, right? So when I start seeing the red candles, that gets my attention. When I start seeing the bearish momentum, that's going to get my attention. And then finally, to your point, Ben, we have two closes with the downtrending criteria. So Friday and Monday. Is it my favorite kind of downtrend? No, it's fresh. It's a very fresh downtrend. In other words, based on on price and participation, when I look at this, based on what I see, we're just now crossing the anchored VWAP for the year, but we're still well above the 200. Don't underestimate how much traders will be willing to buy a stock like this when it is above the 200. Now, it's been a while since it's been in a downtrend, but let me show you this. This is so important. So, Ben, you can have a downtrend and you can get a limited amount of follow through, but please remember, when we're generally above the 200, there's much more probability of a short squeeze after a little bit of follow through lower than there is for more significant follow through. So yes, on the daily. So you might say, okay, then Rog, what do we do in a situation like this? I would shorten the time frame. That's been really a lot of what we've been talking about in the Sector Secrets Mastery. Instead of committing to daily time frame weakness, how about 1 hour? And this would give you a 1 to 3 day time horizon. So if there is an abrupt short squeeze, if there is an abrupt shift, the 1 hour is going to pick up on that and signal it quicker, because you're getting one new candle every hour versus one new candle every session. So I would say, if you're going to short, especially something like this, I would look at a 1 hour or just a longer term intraday time frame, whatever your time frame preference is, Ben, for short term swings. Yes, willing to take overnight, but no, not a longer term commitment of, say, a week or more. I would focus on shorts. So you might say, okay, Rod, how has that been working? Okay, take a peek at the trends that are lower on this chart. Here, downtrend, really quick little window there. And then now you can see that the prolonged period of a down. So every one of these is bearish structure. Okay, so in that environment, in bearish structure, step number one. Then I go to step number two, what color candles? And when the red candles meet the gold daily price movement range, these things right here, right? You can see how consistent that's been, right? I'll ignore this one right here because this was very high volatility, and no real trend there, right? No real trend. So where were the trends? Ideally red and gold, red and gold. So that's what I'd be looking for. All right. So shorten the time frame and then just look for a volatility based exhaustion. Or if you're using a mean reversion, that's fine too. We may not get to the mean reversion as often as we'd like. The daily price movement ranges will be in play more because volatility is just engaged with price in a more active way than, say, a mean reversion, because a mean reversion requires a pullback to the average. That could be a pretty steep pullback sometimes. Not that it won't happen. It just won't necessarily be enough to keep your pipeline full of trades in an environment like this. All right. Next up is, and again, I would not short into lower lows on Uber. Shorten the time frame, find a trend, and then keep that time frame short, because this is a very fresh downtrend above the 200, less than ideal. All right. Do I think SPY will go down before April 29? Let's see what it's doing now. So SPY is really an ES conversation. April 29 is a fairly near-term expiration, so 6 days from now. And it's not a matter of, do I think it's going to go down? Please don't, and honey, I mean this with all respect. Please don't think that's trading. Too many traders think, well, I got this, and could it go down by this time? That reminds me of the binary option craze that got very popular some years back, where people would place bets on usually Forex options based on whether or not the option would be above or below a certain level. I'm not a big fan of binaries, and I'm not a big fan of that kind of thinking. However, it depends on where you bought it, right? If you bought a put, or if you bought whatever you bought, right? Where you buy something matters, because that's going to align with the risk. That's going to align with what you paid for it, right? So I think a lot of folks do that. But in terms of 490 puts on SPY, all right, when did you buy the 490 puts? And I'm not asking in terms of for our show's purposes here, but did you buy the 490 puts on a down day? Did you buy the 490 puts yesterday? Did you buy the 490 puts back on the 11th, right? That matters, because that's going to gear to what you paid. Whether or not we'll be at 490 actually depends on whether or not we can break support. So I guess the main answer is, and I want to be as respectful to your question, nobody knows. Nobody knows. But remember, if you turn on television, those people are calibrated to knowing everything. They're not going to come on air and say, well, I don't know where the markets are going to be, but this is what my analysis says. That's my job, because that's the way I'm going to process trading. Remember, if you're on television for entertainment, and by the way, that's why they're there, or to sell you something, or if you're trading for yourself, our trading questions have to be, how much risk am I assuming based on what I paid for the option? 6 days is going to start to crank up on time decay. So that's a challenge, right? In terms of that option being a depreciating asset. And then I ask myself, how likely am I going to be in an out of the money option? That's also really tough, because not only is the time decay a factor, but now this is an out of money option. So if you are trying to set something up like that, rather than buying the 490 put, buy an at the money put, because you have a bearish objective of 490. Very different way of engaging, right? So if you bought a put in the gold zone, so I'll give you tactically how that would work. Look at the 17th. If you bought a 505 put when price rallied up, that red candle rallied up into the gold zone, and it did, you can see that there, and you have a 490 target, realize right now you're in the money, you're making some money. A lot of traders think that their trades are based on where the market's ultimately going to end up. Market is not about pinning. In fact, I detest that whole notion of, not only are we going to get the direction right, but we're going to know exactly where it's going to land. Right? Why would we put that many hurdles in front of ourselves? So keep that in mind. If you have a bearish objective and 490 is a target, find an at the money put to buy on an up day. What we like to say in the Sector Secrets Mastery is, where does the red meet the gold? Those are things that we can definitely do, right? Those are things that we have a better opportunity of, if at least it's going lower towards 490 and I own a 505 put, or maybe you did that on the 18th and you have a 503 put, or maybe you did that on Friday and you have a 500 put. Notice what a different place that puts you in terms of managing risk. Risk management with an out of the money option with no time, it's very tough. So if you think about risk first, you'll probably not do out of the money options, which I am also not a fan of. So I hope that helps. We all have to learn somewhere. And so this is what I've learned works for me over the past, 30 plus years. So anyways, thank you, gang, as always, for taking time out to join me in the show. I do appreciate the time. I appreciate the questions. And I'll tell you, my best mentors were the ones that told me that's not going to work. And here's why. And typically it's because it won't work at scale. And I want to do for you what my mentors did for me. Sometimes it hurt. Sometimes it was a little ouch. But at the end of the day, it made me a better trader. And that's what I hope for all of you. Be good to each other. I'll talk with you soon.